Hello, everybody. This is Avi Harkishin with your weekly update. So we're going to take a look at a few stocks here. Let's start with the ETFs that we analyze. We're going to do VIX because the Discord know that I always have VIX up whenever I am trading, whenever I'm analyzing everything or anything, matter of fact, because it just gives me an entire gauge of the overall market. And the one thing that I'm always talking to my members about is that please have VIX up whenever you're trading. Know your levels because the volatility in the market will act um, based on where the levels are at VIX. Whether or not know your supply zones, know your demand zones on VIX. So let's get into the first thing that we've noticed here on VIX. VIX is currently trending up, as you can see. It's currently in a range and is currently trending to the upside. So you want to be careful as VIX is continuously holding this range because what we could see, especially with recent volatility and also with the geopolitical issues that we're having right now with Iran and the US, you can easily see VIX starts to make a move and start breakout here. Very easily, you could see this happen. I'm not calling for this, but the market's been consolidating for some time. VIX is creeping up slowly, so you got to watch out for any sort of violent move to the upside that we can see. Not entirely calling for this, but I'm saying it's there. They could possibly happen. As I'm looking at the overall market, there's mixed sentiments, but there's a more bearish sentiment based on the way the charts are currently looking. So right now we could see this play out on VIX, but we're just going to keep trading within this range of 1870 support and 1773. That's the support level that we're looking at, or demand zones, or within this 2044 to 2183 level on VIX. All right, now that we've covered VIX really fast and you understand what I'm trying to say, so I'm very cautious. So let's take a look at SPY. What I have going on here for SPY from pivot low, if you take your fib retracement tool and you start from this pivot here all the way to pivot low, or 613 all the way to pivot low where we bottomed in April, you're going to see we're right at that 618 extension level right on top here. And we're finding resistance at that 618 level. You could just screenshot this chart if needed. So we're very careful because that is where you tend to see some sort of retracement taking place. If we're doing this as a Elliott wave, you can see a wave 1, 2, 3, 4, and a 5 wave right on top here. So there's already a 5th wave that's been taking place. Now, we have completed a 5th wave move to the upside. Let me just remove this here really fast for you. We have completed a 5th wave move. What Elliott wave really, what it does is it just tells you that, hey, the market moves in 5 wave to the upside if you're in a bullish market, and it pulls back in either a 3, a 7, or 11 wave to the downside. What a 3 wave really means is just an ABC retracement, and an 11 wave, which is an ABC, and an 11th wave is just if you're having a double correction, call a complex correction, that's a WXY, or an 11th wave. That's when you really get into the Wyckoff distribution or markdown taking place. That's when you have 2 WXY, where this is not an Elliott wave course, but just want to tell you how the market really moves. It moves in a 5 wave, moves to the upside in the bullish market, and a 3, 11, a 3, 7, or 11 wave to the downside. So whenever you're buying after a 5 wave move, you're buying the 3rd wave, or you're buying the 7 wave if you're buying dips as a long-term investor. We have completed within wave 5 in SPY, we have completed a 5 wave move to the upside. So once we've completed that, you want to be careful because you either start correcting this entire April move, or this here will become a 5 subwave within the macro wave 5. So this here, you've already put in within the macro wave 5, you've already put in a sub ABC. So technically what that means, you're going to correct this bottom here at November 21st, where you have the 650 level. So you could correct this bottom here, which has been corrected here, or this bottom has not been completed, and you're going to put in double XY, and you will correct this bottom. And SPY could just correct this and completely begin to just continue to move to the upside, and you will not correct April. So you just continue to put in one more set of waves. But just careful, because you could start to see if you break this level here, which is this 650 level, 649, this wave 4, that's when you're going to see this April level correct. So if you start breaking this level here, we are correcting April, because you're going to start to see price moving to the downside and maybe 11 wave move, or 7 or 11 wave move, which is probably a WXY or a 2 double XYs put together, simply put it that way. So that's what we're watching right now for SPY. Is the overall market seems a bit more bearish, but the key level here is 675. If 675 starts to break, I expected this move to play out here into our blue box, which is 671 to 658 will be our target, correcting this move. If you start breaking this 650 level, then we are correcting April. That's all you need to know. We're either correcting this move here. If we break 675, we're correcting this move. If we break this wave 4, we are correcting April move, which you're going to see a much bigger retracement back to the downside. That's all you need to know. Bearish bullish thesis, again, is that you do not break this and continue to push to the upside. You break this, you're coming down to the blue box. Let's see here. Let's go to QQQ for a moment. All right. So pretty much almost the same thing with QQQ, except QQQ is a little bit different because there's a bit more bearish sentiment with QQQ in the way it's not just trading, but with the levels. And I'm going to explain to you really fast what I'm seeing here. So, I need to change this. This is QQQ. So QQQ is doing the same thing from pivot low. If you take a retracement tool from the top here, it's 540 to pivot low in April. You're at the 618, where you tend to see some sort of consolidation and a rejection, or you consolidate and you'll break to the upside. And we're currently seeing that consolidation move, and you're just waiting for a direction to be picked. Now, same thing here with this level. You have completed a 5-wave move on QQQ as well. As your wave 1, 2. You've had your 3, 4, and a very short 5-wave move. But you've had that move. It's been completed. There you go. That's the move right there. Now that you see it, I'm just going to remove it. Don't want to clog the chart up. So what we're looking at is the same thing as I mentioned with QQQ, where you're either seeing a bigger retracement of April, or you're just seeing this level being corrected, where you have from wave 4, you've already corrected wave 4 as a subwave 2, pretty much right here, and you will continue to break to the upside from this level here, pretty much. It's the wrong thing. What did I just pick? Okay, sorry about that. And you will continue to break to the upside after you've completed that retracement. This is assuming that you've had, and this here will change, where this is wave A, B, and C, and wave A, B, and C right over here. And now you will continue to push, creating a wave 1, 2, 3, 4, 5, another one, creating a UTAD, and then you break to the downside. That's a bullish possibility taking place. But for now, if anything, you're going to get, if the entire market, especially if SPYs start moving down, you're going to start breaking within this blue box. Now, the tricky part here is this. Remember, I said that if you break this level here, wave 4, you are correcting April. QQQ is slightly different because its wave 4 is way up here, and you're very close to that level. So here it is. So if you have this move, you are breaking wave 4. And once you break wave 4, you are technically beginning a move to correct April. So now it kind of changes the entire dynamics. There's not enough confidence I'm seeing. That's why I'm saying that there are mixed sentiments in the market, and there also mixed analysis the way the charts are set up currently. So you got to be very careful because you could easily see a major sell-off to correct April. So I want you to pay attention to that. Now, what we're looking at is this level here, which is 594. If you start to break this level 594, very likely you're coming down here to 579 to 549. Levels are important. They are key to invalidation of a thesis or validating a thesis. So you got to look at the levels. So mark these levels off your chart. Remember what I'm saying here. So let's look at IWM for a moment. So IWM, almost the same thing, except that it's over, if you do your fib retracement from the top here to pivot low in April, IWM is closer to the 1.618. It's just in between. It doesn't have to hit it, but it's just in between there. So what I'm looking for IWM is a move that retests this level here. But before that, there's a few things. IWM is in wave 5 as well. But the difference with IWM is that we have a wave 1, 2, 3, 4, and there's a fifth wave that's missing. And that fifth wave could be somewhere up here. And then you start a retracement. However, that's what I'm saying. There are not enough confluence. There's mixed signals within the market. Because if the entire market, like SPY and QQ, starts to drop, I'm expecting IWM to also follow the same direction as those. Theoretically, I'm expecting. It doesn't have to, but I'm expecting it. However, if we continue to hold this level and break out, then we'll have a wave 5. Now, there's also a possibility that if IWM start breaking and is coming into the blue box, it means we have completed a 5-wave move to the upside. And this here, let me put this here. This here becomes wave 3. You have wave 4. And this was your wave 5 right there. Now, that's the possibility. And now this here will be you have an A, B, C, and now you're putting in a W, X, Y, correcting this level here. Now, that's the possibility. We're not calling that yet because we need to see levels been broken. So what's the invalidation level to call the downside? That is breaking 255. If you break 255 on IWM, you're very likely coming down to 252 to 243 level, and you're going to see that WXY pattern play out. Key level again. Mark these levels off your chart. Remember this, okay? GDX. We're having more upside on GDX here. GDX seems to be leading when it comes to gold. I'm going to talk about gold really fast because GDX is gold miners, ETFs that tend to follow what gold does. We have a bit more upside here on GDX, so we think we're going to see around 126, this 126 level here or so. You have a 5-wave. You're having a 1, 2. You're in a third wave. You broke all-time high right up here. And you're going to see we're in wave 3. You're going to see a wave 4 and wave 5 pull back to the upside. So I think that's coming next, and you're going to see that 5-wave move to the upside. So still bullish on GDX. The upside doesn't mean go ahead and buy it now. Wait for the pullback. But if you're day trading this, this is what you expect. I want to see a pullback, retest this key resistance level, find some support, and continue up to wave 5. GDX, what's a bit different with GDX here is that you are seeing GDX is lagging behind of, GLD gold is lagging behind of GDX because GDX broke, creating new all-time high, but GLD gold has not done so. So what we are looking for is GDL may break out to all-time high, very much likely, may break out to all-time high. You have a wave 1, a wave 2. So this is what this would be like. Wave 1, 2, 3, 4, come down back at 4, and all-time high up here. Something like this, right? So you're gonna have something like this that will take place where you have this kind of move, or it'll be somewhere in here within something like this, right? Within this range here, you break to all-time high or so, and then you break down back. Now, this price target here might be the same thing as this. So you're watching to see when gold is going to get up here and what GDX is doing up here, because they might both retrace at the same time. That's what I'm looking at. You're looking for the confluence between those two. Let's take a look at some stocks. That's the overall analysis for the ETFs, the indexes. Okay, let's take a look at Apple. For anyone that's following me, I've posted Apple on, I think, X, Twitter, whatever you call it. So I talked about a distribution pattern up here. Matter of fact, I posted Apple since on top. It was on top of this box, and it said it's a short. We're coming back now, bearish in Apple. We saw that move. Went back up, and I talk about the move to the downside here again. And I think on Thursday I posted this move that we just had. Let me just pull that up, which is right here. So this was a chart I posted right over here, and I talked about this move. And you could see that move playing out. Let me see if I could find it for you. It's the ABC move that I talked about, which is, here it is. That's what I posted, and I talked about the short setup, and it's continued to play out. Then I posted this here. Pattern recognition between all of these boxes. Those are distribution patterns, and I talked about it coming down here. That's the pattern that's building out continuous. Over here, you have the same pattern building out, and you're right over here again. And I posted that pattern over here to show you what it looks like that's going to play out. So let's take a look at what Apple has done so far. Okay, here is Apple. It has done as followed. Exactly the same thing. So the whole market tends to follow patterns. A lot of times you got to recognize these patterns. That's what it has done. So we will continue to be bearish in Apple. I think Apple have more downside, and what I think Apple is coming down within this target box right over here to correct April move. But we're looking to see whether or not it's going to break. The only way we think it's coming down here is if it break this level here, which is 244. If Apple break this level, it's correcting that entire April move back within this box over here. Let's look at the 4-hour chart. For now, we still think Apple is going to see a bit more downside. So you're either correcting this move here, which is at 244, and this move has been corrected right over here, 244. But if you break this level here, which is 254 area, right here, 254, you are coming very much likely, you're coming back within this box over here, which is what I'm showing you, this WXY right here. And then you can move to the upside. But if you break this level, everything has to be in validation level, guys. If you break this level, you're coming on back within the blue box. So we're still bearish in Apple. We think there's still more downside. Going into Monday, we're going to be looking at 260, which is key level. Want to see this level hold. 260. Right there. Want to see this level hold. Want to see a bounce. And you can see a WXY come back down. That's for Apple. For AMD, still bearish in AMD. Key level here, you're watching for AMD is 194. Want to see whether or not this level is going to hold, but I think you're ultimately coming down. You're going to fill this gap at 170 on AMD. So yeah, still bearish in AMD. I think any rips is going to get sold. Whether or not you rip to the upside, you fill this gap. Still possibility of you coming back down. You had an ABC to the upside. You could still see a possibility of a WXY playing out, which is WXY. So you can still see that playing out. Ultimately, I do think you're going to fill this gap regardless of if you move to the upside or not. I don't think you're going to break to the upside to new all-time high. I think you're coming down back. So if you're somebody looking to accumulate EMD, I think you should wait. Let's fill the gap first because I think you're coming back down, so you can see this pattern play out. But if you start breaking this level here, you're just coming straight right down to fill this gap. If you start breaking 194 or 190, you're just going to come straight down. This is not going to play out. This level here is not going to play out. Let's take a look at Amazon. Two things can play out here in Amazon. Amazon is having a 5-wave move to the downside. It never broke this level up here. It came very close to it, but never broke this level. We were talking about if Amazon break this level, you're going to see this play out, and then you're going to see more downside in Amazon. However, what you can see taking place in Amazon is this ABC into wave 5, which is right here, an extended wave 5 play out, where you get rejected and you continue to make a C wave down. Your key trading range for Amazon is this level right here, at this 210 level, and this 198 level within this range here. Break between any of these levels, you're going to see upside. You break this level here around 212, 213, you're going to see this gap get filled. You break this level here to 196, you're most likely coming down back to maybe very likely come out all the way down from 184 level. So levels are important. Please watch those levels. Google, tricky one. Google looks like it's building out a head and shoulder pattern right now. We want to see this shoulder get validated if you start breaking this neckline here around 295. If you break 295, Google will come back down and test the bottom of this this range, which is at 270. So right now we're going to continue to remain a bit bearish in Google. If Google start, obviously, key level here you want to watch Google is 330. See if we come back, because you can see that ABC created that head and shoulder. Let me see if I could find it here. Where is it? It's not here. Maybe it's over here. There it is. Okay. You could somewhat see that left shoulder head, and you could create a right shoulder and break the downside. So it's there, but we want to see it get validated. All right. If you see it start moving to the upside, don't get all hyped and start buying it, thinking it's gonna break out. Just wait, see what it does. So we do think it come back down, and especially the market is gonna break the downside. Is gonna come here, but again, validation level right here. Got to see a break of this neckline, which is around 195 area or so. Take a look at Meta. Still think Meta is gonna come back more to the downside. Could see a pop rejection back to downside around 570, 506. Got some gaps over here it has to fill. Want to see Meta fill those gaps. If you're waiting to buy Meta, I think you should wait a little bit more to buy Meta. Still think pop, drop on Meta. Let's see what else. Okay, here's Microsoft. I think Microsoft is it's rejecting right now. We kind of came down, filled this daily gap here, got rejected. Now you're below this daily gap. It looks like Meta wants to come down to 367 and fill this other gap that we have over here. So we'll be watching for Meta to continue to break to the downside. If it start breaking this 384 level here, Meta's come back and fill this gap right over here. So that's what we're watching right now for Meta. You have, Microsoft. Am I saying Meta? I meant Microsoft. Okay. So this entire thing here. So you have, here you have it, A, B, and C. So C wave tends to be anywhere between this level here, target zone. For Microsoft, still think you could see a bit more downside if you start breaking this level here. Currently, it's it bounced. I think it bounced off its weekly 200 EMA. I believe it did. Let me see. So yeah, it's right at its 200-day EMA. So you gotta be careful. Keep bouncing off its 200-day EMA. It's been a while since Microsoft broke it, so I'm not calling the downside because we have technically completed an ABC retracement. So you want to see it hold this 183 or 200 EMA, because then you could start to see some upside. But you could still see a WXY because you could end this here and you could continue to do another WXY if the market is going to break to the downside and you still fill this level here. So just something to be cautious of, but it's been a while since you broke this 200 EMA. It's been a very, very long time. So the 200 EMA is a very tough support level to break. So yeah, I wouldn't go short the 200 EMA while price is at that 200 EMA. Let's see what else we got. Okay, let's take a look at Nvidia for a moment. I'm actually bearish in Nvidia for several reasons. Let's say I could remove this for a moment. That's the pattern. It seems like it wants to play out. For Nvidia, you have a wave 1, 2. So you pretty much have a 5-wave move to the downside, to the upside. And as I said, after a 5-wave move to the upside, you tend to have a retracement of an ABC. So you had that A, that B, and you have to have that C wave. But in this case, it's going to be like a WXY as I have it, because you have an A, B, C. Technically, you have an A, B, C, 3-wave to the upside, and now you're going to have an A, B, C to the downside again. So pretty much I'm still bearish on Nvidia. I think you're going to be distributing Nvidia, and you're going to come down. You have a gap fill here on the volume profile. I think you're going to come down right back to the gap fill right here at point of control, which is right within this range here. So we've been calling that for a couple of weeks. I think that's the path we're currently following. Nvidia looks bearish. Look at the volume kicking in here. A rejection. Our BX trender has flipped bearish on the daily. So we'll be watching this very closely. Once you start breaking key level here, which is 163, 170 to 163, you start breaking this level, you're definitely coming back down within our blue box. So this is our level here. You have this pretty much just kind of like support range over here. So this is like a support range we're watching because it keeps bouncing off of this range here. So we are watching this range from 170 to 163 pretty much. This is where Nvidia keep bouncing. So that's a range you really want to watch for a bounce, which is this A wave I have here. Bounce back up, grab some liquidity at the top here, right above this pivot level of 184. Then you have that drop. All right, so that's what we're watching for because nothing comes straight down. Sometimes it can, but let's go back and look at Bar's pattern. There you go. And this is what I'm looking for. This is probably that A wave. Then you have, could be, this is the B wave right here, and you have that drop. But something along this way. You could come all the way here and close these gaps, which is at 123 or so, but we're not call that yet. We're going to call anywhere, a move anywhere between 153 to 140. I think you could very much see that move play out on Nvidia. Take a look at Tesla. I know my charts are kind of messy. A lot going on when I'm charting. That's how I have a 73% accuracy, by the way, because there's a lot of thoughts that go into the analysis. A lot of stuff. Value wave to white claw, volume price analysis and everything. Patterns. So what we're looking at for Tesla is this. We either have this move here. You have an A, B, C wave into the blue box. And then you have a breakdown on Tesla all the way down towards this 356 to 322 and a WXY. I think you're heading there eventually. I don't think Tesla's going to break to all-time high. Don't think so. You're going to be breaking down. How the path play out until you get there, there's a couple of ways it could play out. Now, we could see an A in the white path. This is path 1, which you can see. You have a symmetrical triangle right here. You could see Tesla do this. It could be, this could be a B wave, or you can still move back up a little bit here where you do a, let me find it for you. You have an A, B, C right here. So you have an A, B, C. Then you have that breakdown to the C wave at the bottom here. If that's the case, then this here, we will have to move this over here. And then this is how it is going to play out. You're going to move back up, get rejected somewhere around here, and then you're going to break down. That will be how that will play out if that's the case, right? If path 1 plays out, what I just showed you, that's what's going to play out. If path 2 plays out, which is path 2, you're going to break to the upside here in an A, B, C, and then you're going to break to the downside. So what we're watching right now to see whether or not we're going to break this 4-hour support at 394. If we break 382, you're most likely coming down back to 367. Your key levels are important. If you start breaking 436, then path 2 is playing out. That's just key level and validation levels. So just want to pay attention to that. Bitcoin, we're still thinking Bitcoin is going to come down to 53,000, 49,000 at this level here. Still feel that's going to happen on Bitcoin. So that's what we're watching, but you've technically, from this one here, you've pretty much corrected this move, which is right here. So you're at a key support level, which is $60,000. But right now, what we're actually watching on Bitcoin is this 4-hour chart. It's an interesting chart, which is this 4-hour chart. You can see a redistribution taking place. If that happens, you're going to break to the downside. And if you break $60,000, then you are coming down lower to 53,000, 49,000. So we're still watching to see if we're going to have a distribution or we're going to break 76,000. If you break 76,000, you're most likely going to be moving more to the upside here. So that's just what we're paying attention to, because a lot of crypto miners and crypto related stocks are going to follow what Bitcoin does, if it's going to break to the downside or not. I'm still bearish bias. Palantir, still think Palantir could break more to the downside within this level here. It's in our blue box, where it could still see a bit more upside, reject, and come back lower. Still think, call me stupid, call me crazy, I still think Palantir is coming down back. We have this level here at $46,000, $46, $42, which is a gap. I still think Palantir is coming back down to fill that gap at some point. If not, you're at least going to see Palantir come back down towards this $80 level over here. Still think it's going to happen. 101, $80 level. So I still think Rips is going to get sold in Palantir. So I'm not a buyer yet on Palantir. Still think you got more downside on Palantir to see. Yeah. So at least to correct this level here on Palantir. You're right at that 618 level, which is here. I expect to see a bounce at this level here, but I still think you could come back a little bit lower. So I'm not convinced yet the bottom is in on Palantir. Still think you could see a major distribution on Palantir to come back to this level, which is right across here. Retest this level here on Palantir. So yeah, I think Palantir's come back to 46, 42. I know, call me crazy. Let's see Sophie. Oh, hold on. Let's see Sophie. Level we're watching here for Sophie is the bottom of this range here, which is between $17 to $14. I think you're coming down within this range for Sophie before you see any meaningful bounce to the upside back around 24 or so. And if you're to distribute, you're going to break this range. But if you want to see a bounce, it's going to be somewhere within this box here that we have for Sophie. MU, I don't like MU right now. I think MU is going to be breaking down. Could be wrong. But once you see this 4-hour support been broken, I think MU is going to come down. It's going to flush all the way back down to the C wave here. If you take our tool, our fib extension, A wave, B wave, you're going to have a C wave anywhere between the fib extension one, which is 346, all the way down to 289. I think MU is due for that pullback, and I think it's very much likely you could see that pullback in MU. So we're still watching it at least at 200 EMA or so. Let me just see here. Yeah, it's the daily chart on MU. Kind of look nasty, to be honest with you. You're seeing that big volume start picking up here on the sell side on top here. Big rejection over here again. I think the choppiness as you're moving up, then you're seeing sellers stepping back again. You're seeing that rejection off the 9 EMA, the daily 9 EMA. Once you start breaking this 20 EMA, rejecting this 20 EMA, I think you could see some downside back to the 50 EMA, which is 365 level play out. So you could see, let's see, you could see here an MU, A, B, C, A, B, C. Yeah. somewhere around this level here. So you can see a flat ABC play out. So my target would be 364 area. So somewhere around this area here. So we could actually lift this blue box up here because you can see that play out as well. Anywhere with between these areas here, I think you could come down. If the market starts selling off more, you're coming back down towards lower part of this blue box to retest this range, the bottom here, this level. So kind of bearish in MU. MSTR could play around a little bit and drop more to the downside. I think you could see more downside here a little bit, especially if cryptos start dropping more. You do have that range that is rejecting if you want to use this trend line pretty much here. It's kind of still rejecting. So it's at the bottom of the range. Still have a bearish RSI not breaking pivot. So because it's not breaking pivot, I'm still bearish on it. Netflix, pretty interesting one. We called the bottom on Netflix. And we said this is going to be where you're going to see it bounce exactly where we called it. It happened. So we're seeing that bounce on Netflix. Let me see if I could do the weekly chart for you. Okay, yeah, here's a weekly chart. This is a log chart we're looking at, and this is a trend line. Touch, this is where you got to touch here. And I said this is a 200-day moving average. And next is going to come down, it's going to bounce. So since next it came up here, it's like what, up 30%. And you are approaching, bounce off the 200-day EMA, the weekly, 200-day moving average, weekly average. Bounce off the trend line. So I think you're going to be moving back up to at least that 110 area or so. And then a decision will be made whether or not you're going to see either this play out. So if you haven't bought Netflix yet, just wait. Obviously, you could break to the upside, create a new high. I don't think it's going to happen yet, at least. You can either see a rejection here, come down for subwave 2. You're not going to create a new low. So what you want to see is, if you're bullish, you don't want to see a new low. If you're willing to buy, you want to wait for that pullback to buy at a higher low, and then see Netflix start continuing in a 5-wave move to the upside. That's if you're bullish. So if you're looking to buy Netflix, have some patience, wait for that pullback. The move is already up 30%. You don't want to be the sucker who's chasing the move. Wait for the pullback. You either, as I said, you either break to the upside and then pull back, or you reject here and then pull back. That's the bull case thesis. If you're buying the pullback here and Netflix starts to break this low at $74 area, that is where your stop is. That is where you get out of a position, because the reason why you get out, because then once you break this level, Netflix will be playing a WXY retracement to retest this level over here. That will correct the entire April pivot low. And that target will be anywhere between 61 to 43. If we're coming back down here, that is where you buy. If you're looking to accumulate a long-term investor, that is where you buy, right over here. So we're still watching this. I'm not completely sure if you're going to do the WXY, but if you're looking to buy, as I said, you want to wait until Netflix do a sub wave 2 retracement. You want to wait for that pullback because there are some gaps on Netflix. You have a gap that is right here. That's one gap you have here, which is around 70 something dollar. You have a second gap up here. So at some point, it's going to come back down and fill those gaps. So you want to wait for that retracement to either fill these gaps, and then that's where you buy Netflix with a stop below 74. Because if you have price coming down at $74, very much likely you are retracing back down to this level. And that is where you actually buy as a long-term investor, because that's where you're going to correct the April low. Let's see what else we have. A lot of people are talking about Unity software. I don't really have much to say about this because you have this volume kicking in here, it's very much likely you could fill this gap and continue to move to the upside, but it's still a bit bearish for me. You've had a lot of like drawdown on this one here, not drawdown, but let me see how much you had. This declined quite a bit, so it's very likely you could see 67% crazy. We actually called the top. We called this move as well. It was on my X. I posted Discord. We called the move, and when we told people to get out because wave 5 isn't complete, and you want to wait for that retracement to take place and see. And now you are correcting. You're either correcting this entire move here from the bottom on you're correcting this entire move here, so you're pretty much here. But if you start breaking this level here at 15, you gotta be careful because this is still bearish in my opinion. There's nothing here telling me to buy this yet. It's kind of still bearish, so I'll just wait a little bit. In a way, I could see like a 5-wave move to the downside in a way. 1, 2, 3, 4. You had a 5-wave move, and after a 5-wave move, what you tend to see is you don't really want to see a 5-wave move to the downside, guys, to be honest with you. This could be a 5-wave move, or it could be a ABC. I'm just showing you how I'm charting. This could be like an A, B, C wave. Then you have a WXY playing out in a way. I kind of did this wrong, but anyways. But you have an ABC to the downside, and you could either see that WXY play out, or you have another set of ABCs playing out. So I'm not necessarily bought up yet that you will not come down further, because you could definitely come down further, and it could go really far, all the way down to this $5 something level. It could continue to distribute all the way down to the bottom of these key level here. So I'm not sold yet on this one here. So just be careful with it. I'm just saying, just be careful. If you want to buy it, but just be careful. Mara. Let's do this. Okay. Mara is currently at a key level here where we saw that bounce, but we're still within this range. And what I don't like within this range that Mara is in, which I think Mara could come lower, is because of this volume rejection top of this range here. Huge volume rejection at the top of the range, and I don't like it. And because of that, I still think Mara could come down lower and reject and come down lower to 513. So I am bearish in Mara because of that reason. Because of the volume rejection that we're seeing at Mara. So I'm still bearish. Baba, still think Baba is going to come down lower. Still looking at this. We do have a 5-wave move on Baba right here. 1, 2, 3, 4, 5. It's possible that Baba could break and have an extension of wave 5, and then retrace back down. But I'm just going to wait for Baba to come down here for me to accumulate more shares. SLV, silver. I think silver is going up to $92 to $96 if you start breaking this level over here. This here is our level right there. If you start breaking 109, then you're looking at a wave 5. This wave 5 playing out here. But right now, our thesis is that you could see B, C back into this area here, and then move up. But I got a lot of selling over here, so I'm just gonna be careful with that one as well. But very much likely you could still see more upside here on silver over the next couple of years. but we're just careful with it. I think anybody want to see AMC? Let me see. Okay, AMC is still tracking to about within this range, about 86 cents or so. All right, that's everything. I think somebody had asked for one more thing. Let me see if I have something. Okay, yeah, Disney. Oh man, this is a long video. 45 minutes into this video already. Yeah, don't like the way Disney is trading. You're seeing I don't like it. You're seeing within this range here, you're starting to trade these EMAs are starting to come together very closely, and you're starting to kind of see the 50 wanting to cross below the 200-day moving average. You call it death cross. Price is below it, and you're trading within this range here. And I'm looking at this, I'm like thinking, is this a redistribution range? And if this is a redistribution range, oh boy, you're going to see this really drop. So just be careful. As long as you're not above this 126, you are in danger with Disney, and it could continue to come back down here. The other scenario is that this is a reaccumulation and you break to the upside, but I'm not sold on reaccumulation because I'm starting to see some bearish divergence on the RSI, and it's starting to kind of show on MACD as well. So I would be careful. I would just be careful. I still think you could come down lower and fill this gap at the bottom here to 93. So if I'm buying this, like I would want to see lower prices to at least 90 or back within this range, so it minimizes my risk to reward I'm taking on. So if you start breaking this low, I take less of a loss in a way. All right, but if you start seeing this here, where is it? Okay, here it is. You start seeing this cross right here, which is called death cross, the 50 EMA. This is a weekly chart. The 50 EMA start crossing below the 200 EMA, which you're starting to kind of see over here. And if you start seeing that separation start going farther apart, just watch out for that, because you're going to see some crazy move to the downside of redistribution on Disney. So just watch for those. I think that's everything I have here. I know it's a long video. Sorry, guys. But yeah, if you've watched this entire video, thank you very much. Have a wonderful trading week ahead. Take care.